All right. In today's video, I want to talk about housing affordability and rather talk about it in general terms. I'm going to show you concrete examples at 3%, 4%, 5%, what that means you can buy with specific numbers. So it's more than just a thought or an idea or a conversation. It's actually numbers you can look at to get some context. Before I jump into it, if you like straightforward content from a mortgage broker who's in it all day, every day, talking to consumers, talking to real estate agents, talking to other mortgage professionals, please consider like, comment, subscribe, share this with any friends that you feel might benefit. I'm going to jump right into it because I think that showing you rather than talking to you about it is probably the best way for people to understand how affordability is going to change as interest rates continue to go up in 2022 and beyond. So I've got 3 different columns here. My hope is that on this screen, you'll be able to see it. It might be a little bit small, but I'll talk through it slowly so that even if you can't see every single line, you can at least hear what I'm talking through. So on the left here, we've got 3%, 30-year fixed. And sorry to report that is long gone unless you're okay with paying points to get that 3%. So in my scenario of a $400,000 purchase with 5% down, we've got principal and interest, mortgage insurance, taxes, and homeowners, all in payment of $21.49. I do realize that for some people in other parts of California where I'm at, $400,000 sounds like you wouldn't be able to buy anything. For other people in, Ohio, this might sound like a crazy high number, but whatever the case, I'm going to use this number as a reference point, and you can go up or down depending on what market you're in. So knowing that at the 3% interest rate, you've got a $21.49 payment, there's a couple different things we can look at. We can look at as rates go to 4% or maybe even 5%, what that is going to do at that same $400,000 purchase price to the monthly payment. Or we can see, given this same $21.50 payment, how much less am I going to be able to afford from a purchase price perspective. So first, let me do the first scenario I talked about, which I'll pull this back up here and spread out so we can see all 3 scenarios at once. At 3% interest rate, $400,000 purchase price with 5% down, $21.49 all in payment. If the rate goes up 1% to 4%, and truth be told, depending on your credit score, you might be nearing 4%. I know I did one recently where somebody had a credit score in the 680s, and 4% was the rate if you didn't want to pay any points. That was the par interest rate. So $23.61 is a $212 increase per month. Now, 4% is still a great interest rate. I don't want people to think that 4% is, a bad thing, but you can see in comparison to the 3% interest rate, you're paying another couple $100 per month. If rates go to 5%, first and foremost, I'm going to tell you, I don't think that's happening anytime soon, but if, maybe a year down the road, 18 months, 24 months, we get to a place where rates are at 5%, that same $400,000 purchase with 5% down is going to be $25.87 a month. So about $226 a month more expensive than 4%, and a whopping, $438 more per month than when it was at 3%. So quite a big spread. Now let's do some backwards math, and let's find out what happens to your purchasing power as rates go up, right? So I'll leave the $400,000 purchase price, and let's just say, based on your specific scenario, your monthly budget, that $21.50 is your number. Or let's just say, hey, I want to keep my payment under 2,200. I can't go above 2,200. What's that going to mean? You're able to purchase with if rates went to 4%, which we're pretty close to, right? I haven't really ran this, so I'm just going to throw out a guess. 360,000. Everything should auto-populate for me. 2125. So you can actually buy a little bit more than that, maybe 375,000. 2213. So maybe we want to call it 370. At 370, your payment is still under 2,200. It's slightly more expensive than, 3% at 400, but you can see there you lost about 30,000 in purchasing power. I guess 8% would be 32,000. So yes, 7.5-ish% less purchasing power. If rates go up to 5% and you're trying to keep your payment under 2,200, where are we going to be at? Probably 335. My best guess. 2166. Let's see what 340 is. 2199. Okay, so down to 340, which is a pretty big 15% decrease from where it was at 3% and a similar payment, right? So one of two things is going to happen as interest rates go up. Either you're going to lose purchasing power and you're going to try to look for something cheaper. In this case, from 400 or from 370 down to 340, or you're going to bite the bullet and say, you know what, 400,000, that's the house I want in the neighborhood I want. And I'm just going to have to be comfortable with paying this larger payment. A couple caveats. One, you've got to qualify for that larger payment. And two, as we've seen over these last few years, and as I continue to see in 2022 with limited inventory, home prices continue to go up as well. So what you might have seen last year for 400,000 in a neighborhood you liked, a neighborhood you wanted to move to, if that goes up by another 10% over 6, 9, 12 months, then you might be paying 440 for that same house. So anyhow, just some food for thought, some things to consider. I hope that this is easy enough to read and it's clear enough. I know this screen is not the biggest, so it's, perhaps maybe you can't see every single line item, but if I talked through it slow enough, hopefully it was something that was easy enough to understand. So any questions at all, please feel free to reach out to me and my team, whether you're buying this year or you're buying next year. Getting a clear grasp on what your specific numbers look like, your specific scenario, is a really good idea. I encourage everybody, whether you're working with us or not, find out what you're qualified for. Maybe you find out that 3.5 cost you 0.5 point or 3.625 is the par interest rate for now. You might want to have a scenario calculator like this where you're just looking at a 4% rate, knowing you might not buy for 2 or 3 months, right? Knowing that rates might tick up. And be prepared for that, right? Get really clear on your budget, your goals, what you're looking to buy, how much that's going to cost, how much the monthly mortgage payment's going to be, how much your total cash to close to be, and all that stuff. Because if you're prepared and you're educated, you're going to be confident. You're going to go out there, submit offers with confidence in a competitive market. And, there's not going to be any surprises, sticker shock, or anything like that. All right. Reach out to us, greatmortgagebroker.com. We're more than happy to help. Thank you so much for watching. Truly appreciate you. And until next time, we're going to see.